those Carvana vending machines, man.
Yeah.
I remember when they first popped up, I was like, is this real?
Right.
Is buying a car going to be like getting a snack now?
It felt like the future, right?
Totally. It was like this shiny symbol of, hey, maybe the car buying experience doesn't have to be so terrible.
Exactly.
But I guess the future isn't always as bright as it seems.
No, no, it isn't.
Today, we're diving into the story of Carvana, this company that literally went from being valued at over $60 billion to like teetering on the edge of collapse.
I mean, it's wild.
How does that even happen?
Well, I think it's a story with a lot of layers, ambition and innovation, definitely, but
Yeah.
also a whole lot of risk. Maybe even too much.
So let's rewind a bit. What was it about Carvana that initially drew people in? What made them stand out from the sea of used car dealerships?
Well, I think they really tapped into a pain point that almost anyone who's ever bought a car can relate to.
Yeah.
I mean, dealerships, they have this reputation, right? Pushy salespeople, haggling, the whole thing can be so draining.
Not exactly a fun Saturday afternoon.
Yeah. And so Carvana swoops in and says, hey, you can do this all online.
Yeah.
Browse, finance, buy, all from your couch.
No need to even put on pants.
Exactly. And then, of course, there are the vending machines.
Those were like instant marketing genius.
I mean, you couldn't miss them.
Did they actually work, though? Like, did people buy cars that way, or was it just hype?
It was both, honestly. Those vending machines created so much buzz, everyone was talking about Carvana.
Oh, yeah.
But beyond the spectacle, it solidified this image, like Carvana was actually doing things differently.
Right. Not just another used car lot.
Exactly. They're all about convenience, transparency, making it, dare I say, enjoyable.
And investors, I mean, they ate it up.
Oh, yeah.
The stock was skyrocketing.
The Garcias, the father-son duo behind it all, they became billionaires, like the American dream, right?
It seemed like it, but as we know, things took a turn.
Yeah, the story doesn't end there.
And a big part of that turn, it seems, was debt.
Yeah, you can't talk about Carvana's downfall without talking about their debt. They borrowed a ton of money to grow as fast as they did.
Right.
And that kind of works when interest rates are super low, like they were during the pandemic, and everyone's buying used cars.
Oh, yeah. Those pandemic car prices were insane.
But then, the economy starts to cool down, interest rates go up, and suddenly Carvana's looking pretty vulnerable.
Okay, so break it down for me. Just how much debt are we talking, and how did it become such a huge issue?
As of last quarter, their long-term debt is over $6 billion.
$6 billion.
With a B.
Wow.
And that's not even all of their liabilities.
Wow.
Now, look, taking on debt isn't always a bad thing, especially if you're trying to grow quickly, right?
Yeah.
But the thing is, Carvana's business model, it was really sensitive to changes in the market.
Okay, I'm not an economist. Explain that like I'm 5.
Basically, they buy used cars, fix them up, and then sell them for a profit.
Yeah.
That means they constantly need cash on hand to buy more cars to sell. Right.
And where did that cash come from?
Loans.
Loans, exactly. So when demand for used cars dips, suddenly they're sitting on all this inventory they can't sell and this massive interest bill to pay.
Yikes. That sounds like a recipe for disaster.
It was. And investors, they started to pick up on this, the uncertainty.
Oh, yeah?
And as investors do, they got spooked.
Happens every time.
They started selling off Carvana stock like crazy.
And the price plummeted.
It did.
Yeah.
Remember that $60 billion valuation? At one point, their market cap dropped to under $1 billion.
That's just wild.
It's a free fall.
So what happened to the Garcias, the father and son? They must have taken a hit, right?
Oh, absolutely. Ernest Garcia II, the father, he was a major shareholder. His net worth dropped by billions, with a B, dollars.
Billions.
And for Ernest Garcia III, the CEO, I mean, the pressure must be immense.
Yeah, trying to save the company, but also, his family's legacy.
Right. It's a lot more than just business at that point. So beyond just the financial roller coaster, what does Carvana's story tell us about, innovation and the whole idea of growth at all costs?
Well, you can't deny they were innovative. Their platform was slick, their delivery system worked, and their marketing was top-notch.
Right.
But they were also incredibly aggressive, expanding into new markets, acquiring other companies, spending tons on marketing, all fueled by that borrowed money.
Yeah, that growth at all cost mentality, it's almost like a Silicon Valley mantra.
It is, but as we see with Carvana, it can be incredibly risky.
So what happens next? Can they pull out of this nosedive, or is it, game over?
It's a tough one. They've had to lay off employees, close facilities, scale back their ambitions.
Yeah, I see the headlines.
They're also trying to restructure their debt, find ways to be more profitable, but whether it'll be enough, it's a real fight for survival at this point.
It's a reminder, I think, that even with a great idea, even with tons of money, success isn't guaranteed.
Definitely. It's a story about innovation, yeah, but also about balance. Balancing ambition with financial discipline, because things can change fast.
And when they do, you got to be prepared.
Exactly. You can't just assume the good times will last forever.
Well said. So, listener, what do you think? What lessons can we take from Carvana's wild ride? How do you balance ambition and sustainability in your own life, your own career? It's something we should all be thinking about.
I think that's a great question to leave everyone with.
For sure.
A lot to unpack there.
Absolutely. And who knows what the future holds for Carvana? We'll have to wait and see.
Only time will tell.
That's it for our deep dive today. We'll be back soon with another fascinating story from the world of business and finance.
Can't wait.
Until then, keep learning, keep questioning, and as always, thanks for listening.